This is the introductory finance course. The course name is uh, Finance 254, Introduction to Financial Management. This is the course that most universities offer in undergraduate level as the introductory course of finance. So what is finance actually? Finance can be defined as a science and art of managing money at personal level. Finance is concerned with the individual decision about how much of our earning we spend, how much we save, and how much we invest in our saving. In a business context, finance involves the same types of decision: how a firm raises money from investor, how firm invest money in attempt to earn profit. Because business always want to earn profit, business runs for it, and how they decide whether to reinvest profit in the business or distribute them back to the investor. So basically, in corporation or in business, it doesn't mean that investor always get the 100% profit that the firms make. So they can get something, and other money will go for kind of reinvest. The basic terms to remember here is reinvest, or and this is finance. So legal form of business organization. Business organization basically तीन रकम है. The number one is sole proprietorship. This is a single owner business, and partnership is a business owned by two or more people and operated for a profit. Every business is operated for profit other than non-profit business. So they also kind of operating for a profit. So basically partnership is basically owned by two or more person. Most of the cases the person is 2 or 20. This is the person they can create a partnership company. A corporation is an entity created by law, state law. A corporation have legal power of an individual in that it can be sue or sued, make property and party to be contract, and acquire property in its own name. So as a corporation is as an individual entity, corporation has the power to make contract, to acquire property of its own name, and it can be sue or can be sued. A corporation act as a entire entity created by law. So this is the weakness and strength of common legal form of business. So if we look at the sole proprietorship business, owner always receives all the profit and sustain all losses, no organizational cost and income included, and tax on proprietors personal income. Basically personal income এর উপরে tax দেওয়া হয়. Independency, secrecy, easy of dissolution because there are no more people than him, kind of. This is a single owner business. In partnership, kind of it can raise more funds from than compared to sole proprietorship, and borrowing power enhanced by more owners because there are more owners involved in this business. So more available brain power and managerial skill also available, income included, and tax and partner's personal tax return. So this is basically the strength. And corporation strength is the owners have limited liability because corporation act as a entity, as a person. Corporation is solely responsible for its own liability and profit. So owners have limited liability. It means that owners, whatever the amount owner invested in the corporation, she or he is only responsible for this amount only, can achieve large size by a scale of ownership of stock. Corporation often offer ownership of stock. They sell their ownership often, and ownership is readily transferable. Stock is always transferable. Long life of a firm. This is the basics. And if we look at the weakness of this business, the weakness point of sole proprietorship is owner has unlimited liability and limited fundraising power. If you look at the partnership section, that owners have unlimited liability as like to kind of sole proprietorship. Partnership is dissolved when a partnership dies. Difficult to liquid and transfer partnership, because if a owner don't want to continue the business, the probably the other owner should do, and there may be some negotiation between what can be happen if if someone withdraw their partnership. So corporation, if we are look at the corporation weakness, the corporation weakness can be tax legally higher, tax generally higher because corporation income is taxed. If it is basically the corporation income is taxed by more than 40% in any state of the world. So this is the big weakness and more expensive to organize than other forms of business. So basically the corporation is kind of big business, so they have to operate with more people, and also their revenue are very large. Lack of secrecy, because regulation require firms to disclose financial statement, and in order to be a corporation must have to disclose the financial statement publicly. So by doing that, everyone can know that what is the financial performance of that company. So what is the goal of a farm? Is maximizing profit. The goal of a farm is maximizing profit. If we clearly look at the investment, is one investment is called is rotor company. If the earning per share is called EPS, and the earning per share of first year is 1.40, second year 1.0, and third year 1.40. The total is 2.80. And if we look at the second investment, the first year is 60 and second one 1.0 dollar per share, and third year 1.40 per share. So if we combine all of this, we will get 3.00. And the profit maximization may not lead to the highest possible share price for at least 3 reasons. The timing is important, because the sooner money is better than the later money, and profit don't necessarily result in cash flows available to stockholders. So basically profit হইলে যে কোম্পানি শেয়ার হোল্ডাররা টাকা পাবে ব্যাপারটা এমন না, কোম্পানি প্রবাবলি ইনভেস্ট করার জন্য সেটা রেখে দিতে পারে, and profit maximization fails to account of risk. So this is that the goal of the firms is the financial manager decides calculate the risk and return, and if the decision increase the share price, they accept the project, and if the decision kind of decrease the share price or does not increase the share price, they often reject the project.